Hey guys, welcome back. Um, we're gonna be doing FOMC review today. FOMC that happened at 22 February. I'll be doing the review today and things you should be looking at whenever there are high impact news. It doesn't really occur to FOMC alone. Any high impact news. And for the previous video on Forex risk management, I'm very sorry for the audio quality. I did not know I was too quiet, like my voice was not really audible. I did not know that. But if you use headsets, you should be okay with it. Alright. So I want to do small review of how high impact news work. The thing is, this might not be really constant. It might not happen every time, but trust me, I've seen this happen a couple of months now, happening almost every week. But thing is, you shouldn't be trading news. No, you shouldn't be trading the news. You should be trading after effect, because whatever the news is doing, the after effect is the main move, is the big move. The news is just small, just gallivanting up and down. That's not what you're supposed to be trading. You're trading the news at that moment, you are gambling. News was exactly at 2 p.m. New York time, and at 2 p.m. you have open positions. That's gambling. That's, you don't even know what to do in the market. Maybe you just pick a place, price mitigates that area, or price refills an imbalance and trigger your buy, then boom, you now made profit. That's not how to trade news. You trade after effect. That's what you do. You trade after effect. Okay, so how to bring attention to what news does most times. I made a post on Twitter recently. I made this post on Twitter recently where I said on the 15th of February, I made this post. If you are not following me on Twitter, you should check my handle, Sam Crypto. You can see the username there, or you can go to the profile of my YouTube channel. You see a link that directs you straight to my handle, because I drop updates from time to time. Okay, so I made a post saying this: price always takes out the SSL. If you don't know what SSL means, it is simply sell side liquidity, or BSL, simply buy side liquidity, created by high impact news. You see why you should be trading the news at that moment? Because price always takes either side of the low out, if it's bullish or bearish, before it's pulling run for BSL if bullish, or SSL if bearish, using the 1 minute time frame. Okay, so let me explain this. Let me break it down. What I mean here is by price always takes out any low. I remember what I said in the market, that every single high and every single low in the market is a liquidity. Price only prioritize equal lows to single lows. Price prioritize equal lows more than single lows. So any high, any low you see in the market, they are simply what? Liquidity. And if you know the time to utilize this, you know what exactly you're doing in the market, or you're doing on the chart. So price always takes out the sell side liquidity, or BSL, or buy side liquidity, created by high impact news. Now, I did not add all the information to this, but you should know this: price always takes it out before it's pulling run. What I mean by pulling run is by a sharp movement, or a movement with high momentum, to another buy side liquidity if we are bullish, or sell side liquidity if bearish, using the 1 minute time frame. Okay, let's get rid of this. So if you are not following me on Twitter, you should check my handle, Sammy Crypto. It spells capital letter SAMMY, then crypto, not really O, but 0, like the figure 0 at the last. Okay, so you should really check that out, because I drop lots of updates you wouldn't want to miss most times. Okay, now let's say this is the 5 minute time frame, right? This is the 5 minute time frame. Now, what I was looking at as the day opened on Wednesday. Okay, let me take this out. Now, let me do a review of yesterday in a very short video. What I was looking at as the day opened, for Wednesday. Yeah, check that out. Okay, this is Wednesday open. Remember what I told you, the midnight New York. So price was not really clear on what side or which side it was heading to, but it's dropped this equal lows here. Whenever you see something like this in the chart, what should come to your mind? Remember that, okay, Sammy said price always prioritize equal lows. That means price always see to it that it takes out equal lows or equal highs in the chart. I'm the one telling you, yeah. If you don't see it like that, it will happen maybe some other time. Maybe even that day, the next day, it will surely happen. Price takes out these lows. Price dropped this equal lows. Price loves taking out equal lows. So what we should do is, New York Open. New York Open is 8:30. Yeah, I told you that. I told you about the 8:30 New York Open. And if you should calibrate your chart at 8:30, you should be expecting a fake move or a Judas swing, as ICT would call it, before the actual movement. Now, let me shift your attention from 8:30, because there are some kind of market condition where 8:30 makes a breaker and 9:30 invalidates that breaker. So I don't want you to be looking at 8:30 anymore. Not for people that are trading crypto. Okay, so I don't really know how equities open react on cryptos, but for those of my guys that are trading Nasdaq, I want you to shift your attention from 8:30 to 9:30. Can you do that for me? If you can, thank you. So we shift our attention from 8:30 to 9:30. We are trading Forex, we are trading stocks, bonds, futures, whatever. Do the same thing. Shift your attention from 8:30 to 9:30. 8:30 is the official New York Open, but shift your attention from 8:30 to 9:30 to expect something. Okay, so if you're not going to be watching this video, sorry, you missed that. I know why I'm saying this, and I'm going to explain why. Because 9:30 is equities open, 8:30 is New York Open, but 9:30 is where the main move occur. Yes, 8:30 you want to see a fake move, a Judas swing to the upside, taking out SSL before price spool to the downside. Yes, by 8:30 or after 8:30 you want to see that. But why check at 8:30 when this thing occur exactly at 9:30? That's the thing. Why are you checking 8:30 when this move occur exactly at 9:30? So you should go and study your charts. I don't take my word for it. Study your chart and you understand what I'm saying. Okay, so this is a short-term buy-side liquidity, right? That's a liquidity. A single high is a liquidity. So you expect price to take out that liquidity. If you draw from your left chart, your left hand side of the chart, you know that price is tapping into an imbalance there. I'll not draw that. You can go to your chart and do this. Trust me, if you're just watching this video and you're not doing these things on your chart, you're not going back home to study and all of that, you won't understand a thing. And if you're watching these videos like you're watching Netflix, you won't understand a thing. You need to be there with your chart, you need to be there with your notes, taking things down that sounds new to your ears. Okay, so exactly 9:30 price ran for buy side liquidity. This fake move is telling you exactly that price is ready to take out this equal lows. As easy as it is. It's not really simple to spot these things out on live market when prices are printing right in front of your eyes. It's not really easy to spot them out, but trust me, if you should study, you'll be able to spot it out. I shared my chart to some of the guys yesterday. They watched me to this sell. I'm not gambling. I actually know what I'm doing. If there was, I know aside this equal lows, there was a 1 minute sell side here. Sorry, 1 hour sell side there that I was looking for price to take. All right, let's look at that. Where is that 1 hour sell side? Okay, these are 1 hour time frame Nasdaq, and you can see this. That's sell side, that drop. taking out this previous sell side liquidity, this previous relative equal lows, that drop created another sell side liquidity for price to take out, right? So you see that the price is just doing three things on the chart. It's just doing three things on the chart: running for liquidities, leaving imbalance, and rebalancing. Those three things: running for liquidities, leaving imbalance, and rebalancing. The aspect of rebalancing could be price rebalancing a FVG, rebalancing an imbalance, and tapping into an order block and all of that. But people try to make this order block a kind of a thing, a theory on its own, which is not actually so. Price have three things. I know some people who say price deals with structure. Yes, structure is like the visual presentation. It's like just the outward look. Yes, price deals with structure, but I don't really use structure. Price deals with liquidity, imbalance, and rebalancing those imbalance. So that's just how it is. Okay, you should write that down in case you forget. So let's head over to the 1 minute time frame and see what code say. All right, 1 minute time frame. So we have this yummy equal lows, yeah, very yummy, and we have that 1 hour sell side liquidity. Aside hindsight, this is what I did, and this is what I was watching yesterday. Aside hindsight, I'm not saying I'm the best, please. I'm not saying you should tag this channel the best. I'm not saying you should call me good or call my chat goated or whatever. I'm just trying to teach you what I understand about reading price. The aspect of psychology, mindset, and all of that, maybe I'll start a podcast for that. Could be Twitter space, could be weekly podcast for that, and it's free to join. But for this channel, we'll be talking more on reading this price. People get this is the first step into trading. People get this thing wrong a lot. I'm not saying your strategy is poor. Please don't misquote me. Your strategy is not poor. If you study hard to refine your strategy, it will really make sense for you. But I've traded with multiple strategies that was not really working for me. Then at some point I found a strategy and I stick to it. So you should understand, or you should know when your strategy is failing and not really working for you. Then maybe you should try study another thing and stick to it. Okay. But if your strategy is okay and you trust the strategy, then there's no need for you to leave it. All right. So why are looking for 8:30? You know, that's almost 1 hour before. 9:30 is where the actual move occurs. So equities open, price open at 9:30. You can see there. That's 9:30 open. Price opens, and oh my mind, I know that the day was supposed to be bearish for me. The day wasn't supposed to be bearish for me. Why? Let's go to the daily time frame. Let me explain why the day wasn't supposed to be bearish for me. Okay, so you see this, all these are inside. All right, this is daily imbalance, right? That is daily imbalance, and normally for you to know that price is going to be bullish, price shouldn't refill all the imbalance. It should at least leave the quarter aspect of it using the 1 minute time frame to demarcate. But we have the daily order block, yeah, I have the daily order block there, and we have only this sell side liquidity. I remember 2 weeks ago where I dropped this bias. I dropped this bias on my Telegram channel. So in case you're not on my Telegram channel, you should check the link on the YouTube channel profile and join now. Sorry, I cannot screenshot or show you my channel, my Telegram channel, but if you want to join, you can check the YouTube channel profile. You see the Telegram link and you join from there, or you check the description of this video, you see the Telegram link and you join from there. The price traded into this order block, daily order block, and refilled 100% of this imbalance, refilled everything, tapped into that 1 hour sell side liquidity. After tapping into there, I was like, okay, there's no need for price to come into here. Why? Because if you watch the weak zone liquidity, if you've not watched the weak zone liquidity, please I'll tell you to go back and watch that video, weak zone liquidity. What happened here? Exactly, weak zone liquidity. Price taking out liquidity and running upside. So except price is bearish, price have nothing to do here. Price have nothing to come and take this out, except price is bearish. So looking at that, I saw price refilling this. If you tackle that 1 hour sell-side liquidity, and all that occurred to me was that okay, fine, price is ready to pull up. So it was not really a full bull and bearish day for me. It was bearish in the morning and bullish in the afternoon or PM of New York. So price turned out to be bullish that day, and you can see this is an imbalance left in price. This is an imbalance upside here, and this is also an imbalance. Now at this state, I cannot tell if we are still going to pull up to this equal highs, right? I cannot tell you if we are still going to pull up to this equal highs. Yes, it's okay to be wrong. So I'm telling you, I can't tell. I'm making this if we are going to pull up to this equal highs. But what I can tell is we are going to pull up to this imbalance and up to this imbalance. But I want to see the reaction that is occurring in this imbalance, right? If price should feel this imbalance, half of it or somewhat half of it, and rejected from that place, then I know we are bearish. If it should refill that imbalance, half of it, and reject, I know we are bearish. But if it should refill all, head over to this imbalance, do the same thing, I want to see, then I know we are bearish. If not, we are heading for this equal highs there. I'm not taking my eyes off that. All right, equal highs, price, prioritize them very well. Let's go back to 1 minute time frame. Okay, so on the 1 minute time frame, you look for the OTE, right? The OTE, or the simple entry model, however you want to call it. So price takes out that buy side liquidity, then you can watch the action here. Created this short term low, then this high, then boom, that's it. CB. Forgive me for the name. ICT calls it CB, but that's not really a clear CB, but you can see it's one candle. So you can see the let me remove this. You can see the simple entry model. Price have taken out that sell side liquidity, buy side liquidity. Its next work is to do what? Is to take out those equal lows there. So you want to enter as soon as possible, right? That's why I love entering with market price, because at this point, price will wait for you. This chart will be very fast, like I mean very, very fast, for you to go and be calculating your risk and setting limit and all of that. But once you just calculate your risk, you know how many lot size you're supposed to enter the trade with, you just boom. Once price trade into that, you enter with market price, and there you go. Let me use the position tool to make it at least a bit professional. Okay, so there is your trade for the New York morning. Looking at price taking out this equal highs, equal lows was my target, catching over 95 pips just in 20 something minutes and over 6 weeks to 1 ratio. That was it. So price took that equal lows out, took out this 1 hour sell-side liquidity out. All my mind was, okay, fine, price is ready to be bearish, and so price is ready to be bullish, because we've done the one side of the job. Now we've taken lows. What next occurs when price takes out lows is to run for opposite, right? To run for the opposite. Now price creates this buy side liquidity there, and he ran above that buy side liquidity, or he ran close to that buy side liquidity after the PM. You can see this is 12 o'clock. I did not calibrate my 12 o'clock to 1 o'clock, 1 p.m., 12 p.m. to 1 p.m. Price created that buy side liquidity there, relative equal highs. Then at FOMC, this is the interesting part. At FOMC, 8 p.m., people were gambling here, trying to short, trying to buy, catching either one of those, and they lost their account. That's what they do. That's exactly what they do. You're not supposed to do that. If you are in this channel, you are not supposed to do that. Now, if you wanted to catch this short-term sell, you will see the BC or the CB here, sell side imbalance, buy side inefficiency. You see it here. Also the simple entry model, the price drops, break this low, also leave this FVD for it to enter. But at this point, I'm not entering because my main look is what price taking out this buy side liquidity. Now, what did I make? What the statement I made about that post? 8 p.m. sharp, price created the sell side liquidity. That's what I outline as FOMC SSL. Price created the sell side liquidity, price created that buy side liquidity caused by the high impact news caused by FOMC. Now, if we are supposed to be bullish, I want to see price takes this SSL out. I don't know about your pair, but for Nasdaq, this is what I know. It doesn't occur every time, but trust me, it happens 80 or 70% of the time. I don't need to be perfectly accurate, but I need to know what I know and I need to know how to execute them. All right, you're looking for perfect. You're looking to be perfect in trading. Sorry, you stick a little while longer without making a dime. Price formed this or created this FOMC SSL. I want to see price take it out, but not just taking it out. I want to see price takes out that FOMC SSL and do either of these two things. Either it taps into an imbalance or it's taking out another relative equal highs or relative equal lows. You must do one of those things before I'm satisfied that price is running for buy side liquidity. Yes, it might seem complicated, but at this instance, you want to go to the 5 minute or the 15 minutes to check for any imbalance that is at the left for price to refill. Because after price takes out this FOMC SSL and it's created this imbalance here, right? You know, the OT, the simple entry model, not it though, but something like that, and you want to enter this FVG, you would have taken a loss. So this is what I do. I want to see what imbalance is here for price to take. What imbalance is here for price to take. Now, I'm not just setting limit order on this imbalance. Sorry, this video is becoming too long. I just hope you get one or two things from this video. I'm not placing limit order. I don't place limit order on this imbalance. I'm not doing that. If I would have done that, you'll say I would have taken a loss here. I don't do that. I'll outline my 5 minute FVG, my 5 minute balance. Very, very important. Now I'll come back to 1 minute. Now from that 5 minutes imbalance, what you want to be checking on the 1 minute. This occur at any time frame, whenever you want. Whenever there's an high impact news, trust me, do this. Or whenever you outline your imbalance on the 5 minute or the 15 minutes, trust me, do this thing. Go to the 1 minute time frame again and look for any imbalance there. That is what price is going to perfectly respect. Price is going to perfectly respect that 1 minute time frame. But the 5 minute FVD there is just like a call to action, or let me see, AY, area of interest. Price will come back to that 5 minute FVD. Yes, as it came back, some people want to buy because price have done this and all of that. Let's say they want to buy at this imbalance here. Some people that don't know what they are doing in the chart want to buy at this imbalance here, placing their stop loss over here, and they get taken out. And before you know, they say, oh, the strategy doesn't work. That you're not doing exactly what you were told to do or what you were taught. Price, this is the 5 minute imbalance. Is there any imbalance there on 1 minute? You can see that place is extremely efficient. That place is extremely efficient on the 1 minute time frame. Where is the 1 minute imbalance? Look at that. You can see that. Let me remove this color. I don't know what color is going to be that after uploading this video, but for me it has somehow blue. You can see this imbalance there. You can see that imbalance on the 1 minute time frame. That is what price is going to perfectly respect. The imbalance on the 5 minute time frame on the 1 minute is efficient, so price will not respect that. Price will respect this last imbalance, and mind you, prices don't have any business again to do at the bottom here, because price have taken a relative equal lows. Price have taken 1 hour sell side liquidity. What next is left for it to do is to take out, and price have taken FOMC SSL. What next for it to do is to take out a buy side liquidity. But thing is, this is just hindsight. I was watching all of this happen on my system, but I did not trade this. Why? Because my trading stops at 3 p.m. New York time. You are aware of this. When I thought about the how to trade New York PM. You should know that. So my trading stops at 3 p.m. New York time. From that time, I'm done for the day with whatever it is. This thing happens exactly the same once there is a high impact news in the morning, New York morning. It happens exactly the same thing. I've seen it many times. It has happened many times. Now price ran into that 5-minute FVG, make this fake move, came back again, perfectly priced. You can see this algorithmic. That's the algorithm. Perfectly priced into that 1-minute FVG. After pricing into that 1-minute FVG, you don't want to be setting limit order here. Trust me, guys, you don't want to be doing that. You want to look for an entry, right? From there, price breaks this high, or this high, however I want to call it, or which of the high there. There are many highs there for you to outline. I'm not really going to specify that for you. Price breaks this high, breaks this high, breaks this high, breaks this high. But what you want to be looking at is, after price breaking all of these highs, is there any imbalance for price to trade back into? Yes, there is. Algorithmic. This is not caused by buyer's pressure or seller's pressure or all of that. This is clear algorithm. Price creates that imbalance. Your entry is now here. For this time, this is already around 4 p.m. or getting to market close. You know, for Nasdaq, I don't know if it happens for other pairs. For Nasdaq, around New York 5 p.m. it closes for an hour. Then for that 5 to 6 is dormant. Then 7 is or around 8. Sorry, 4 to 5 it's dormant. Okay, forgive me, around 15 to 8 for that 1 hour. For that 1 hour, around 15, which is 5, it's dormant. Price is closed and opens back around 6. So you can see from the time here, it's there, 1640, 1650, and before you know 1801. So there's no 15 because price is always closed for that 1 hour. But price does nothing for that 1 hour. And just like the way price closes on weekends, price close for, I don't know for Forex pairs, but for Nasdaq I've observed it and I've seen it a lot. It's not even there, obviously, on the time frame. So now this is something I don't trade because this is past my trading hours. But if this occur in the PM, in the New York AM, this is exactly what I do. I wait for high impact news. It creates a sell side liquidity. It creates a buy side liquidity. I'll look for any imbalance at the left. Now that imbalance should correlate exactly. Is that imbalance taking out a liquidity? That's what you want to check, because it should not be any kind of imbalance. You should know your narrative around this thing. Please don't misquote me. You should know and you should have a narrative. It should not just be any kind of imbalance. If you are doing any kind of imbalance, you get wrecked. You definitely get wrecked. Sorry to say this, but you get wrecked. You should have a narrative. This imbalance was created after taking relative equal lows, taking 1 hour outside liquidity. So I'm okay and I'm satisfied with the fact that price is not going to take this out again. I'm satisfied with that fact. It should not just be any imbalance. Maybe you see an imbalance there on the left which is taking nothing. Trust me, price will take that out before even moving. So it's going to hunt your SL, your stop loss, or whatever you want to call it. So high impact news creates its own SSL. You wait for price to take that out. If price takes that out, it should be tapping into a narrative imbalance, not just any imbalance. If there is no narrative imbalance, then price should be tapping or taking out another relative equal lows. Trust me, this works every time. Okay, this works every time, not accurately every time. So you should have all these narratives guiding your strategy. You should have all of these confluence. What's happening to TradingView right now? Okay, I think TradingView is hanging out. I think it might be at my network. You should have all of these confluence guiding your strategy, guiding your entries and all of that. Just I'm not saying you won't take a loss. Definitely you lost in some trades, and that losses should be something you're learning from. You need to pay the charts to learn something from it. That's just how it works. Your risk management only tell how much you're paying the charts, how much you're paying. All right, you should not be at the by the process of paying the charts you lost all your own accounts. That's not it. Risk management, watch the previous video on crypto or forex risk management, and also crypto risk management if you trade crypto, so you understand how to go about risk management. But trust me, I hope this explains the FOMC that occurred yesterday, while I was just looking at guys doing lots of things on the chart they don't really know. And also, it doesn't occur to only FOMC. CPI, anything, whenever you see impact news, don't trade. Just take your time, forward test these things, and back test it with your demo. Alright, back test, go to old data back test, forward test it with your demo, and drop reviews here on Telegram community, my DM, wherever. Okay, so thank you for sticking around. Please, if you find this video insightful, like, share, and subscribe. Right? Okay, until next time, be safe.